So, dear all participants, as you are aware that as far as the income tax act and our charity activity is concerned, there are some technical the concern that we need to know, and we are also facing all these things. So, considering all this, the complexity, we have designed the session title, "The Charitable Trust: Cutting Through the Complexity." And this session is going to take by very eminent and experienced and seasoned practitioners, CA Premal Gandhi sir. Sir is a practicing chartered accountant and partner at PGS and associate at Mumbai. Sir is also author of many books, and uh, uh, about his the one of the best book that recently he published on the charitable trust, cutting through the complexity. So, sir has almost the 20 years plus experience, especially in the accounting. Sir is also part and parcel of the auditing and insurance divisions, and the handling the various due diligence process nationally and internationally as well. Uh, Sir is also work with the very the like a very eminent consulting firm called Deloitte and other the large auditing firms. Apart from this, sir is also the eminent expert, especially to handle the issues related to Bombay Public Trust Acts, and is a very also renowned practitioner, especially in the state of Maharashtra. Sir is also the members of various the professional bodies such as the committee member of IND, as committee of WIRC, the managing committee members of the Goods and Service Tech Association of Maharashtra, managing committee members of the Chamber of Tax Consultant. Sir is also the writer, and hence sir is also peer reviewers to for a research paper, especially the publish in that particular areas of taxation and charitable trust. And sir is also the regular and the prominent speakers to speak on the Bombay Public Trust Act, with the income tax acts and all the issues related to charities, income tax, and all other things issues related to that. So, sir, on behalf of development sector communities and Navjivan Center of Development, it is my privilege and honor to host you. And after a long time, sir, we are find your time to discuss and deliberate all the prominent issues that the NGOs especially are facing. And I'm sure that the session that you are going to deliver with us it definitely become meaningful, and the people will learn from you, learn a lot from you, sir. So once again, I welcome you, and I also welcome all the participants who joined the session from across the country. Thank you, all participants, and thank you, sir, for being part of this knowledge dissemination series. Sir, please.
Thank you so much. It's a proud privilege for me uh, to take this session um, and speak in front of people from various parts of India. As I told Sanjay bhai in the beginning, that knowledge is not a proprietary material. I always believe that knowledge is there to be disseminated and part is given to everybody. In fact, the more we give, the more we learn and more we get. So I believe in that theory of karma where you say that it says that where you give something, you will receive double. And to that extent, we all are selfish human beings. So I am not an exception to that. Therefore, I believe that if I give something, I'll get twice the double will be given to me by God. And to that limited extent, even I am a selfish person. So I always believe in giving knowledge, so I'll get double the knowledge. And that is the experience that I will gain. So thank you so much once again. I'm really thankful to each and every of the participant who's come over here to share their views. I mean, to listen to me. They have spent or they are willing to spend their time, very precious time. So thank you once again from the bottom of my heart for sparing your time. And I look forward to ensuring that at least we all learn something from today. Um, Before I start, I hope I can share my screen, right? Just a minute. Give
Yes.
me 2 minutes to just start my screen.
Sure, sir.
I hope my screen is visible.
Yes, sir.
Right. So, mm, how do we empower the charitable trust to grow? Why have I selected this? So one of the reasons of selecting the topic as cutting through the complexities, the reason being, if you see, I always believe, and I think every one of us believes together, that charity in this country needs to uh, progress, move, and be continuing, given the fact that by God's grace, we are fortunate enough to have some of the privileges in life, but there are very many who are underprivileged. And obviously, to that extent, charity has to continue. I understand that over the last couple of years, the income tax, there have been a slew of amendments which have happened in the Income Tax Act, which has caused a lot of challenges amongst the practitioners, amongst the NGOs, and amongst the fraternity at large. And that has led to a lot of upheaval. Um, the last count that I did was that we've roughly incorporated about 38 plus provisos. One thing which I would like to make caveat at the start of the itself is that, see, honestly, 1023C and section 11 to 13, these are the sections which practically apply to the charitable entities. But obviously, rest of the sections are common for everybody. But for a charitable trust, these are the only specific sections. And to the limited extent, we may say it is a code which is applicable to charitable trusts. Under 1023C, there are various sections, but section 3, A, B, C, those are for our discussion purposes. We need not discuss this today because they are practically where our organizations which are government funded. Whereas 4, 5, 6, and 6A are the ones which are the ones where charitable entities are privately held. And in the last couple of years, they have been made at par with charitable entities which are registered under section 11 to 13, more so section 12AB. So practically they are 1023, 4, 5, 6, and 6A are mirror images of section 11 to 13 now. And for therefore our discussion purposes, we will everywhere you may see that I would have mentioned section 11 to 13, but that applies to 1023, 456 or 6A also. Then they are mirror images. So that was the one small caveat that I wanted to start and then. Given this background, obviously, what in this topic that I mean, why I have put this slide, first slide I have already said that we need to empower charitable trust so that the underprivileged can as also grow and ensure that the charity survives in this country. We need to ensure that charity needs to, while we also need to ensure that charity needs to survive, but I would like to make one more caveat. There's a very good saying charity begins at home. So even I prophesize that charity begins at home. But I say while I am at home, my home, I will do charity. But I don't do charity when I'm in office. So charity does not belong when I'm in office. So to that limited extent, I will always say that all practitioners should ensure that they do not do work pro bono, because at times I have come across situations where practitioners have said that we have done pro bono and therefore we have not taken due care. Today, the regulations have become such stringent that if you do something and you say, take the shelter of being doing it for pro bono and therefore you did not take due care, you will have a tough time. So to that extent, I will say that charity does not begin in office. Given that background, let's move forward and ensure that everybody gets the maximum out of this. So, Sanjay, is my screen visible?
Yes, sir. Your screen is
Okay.
visible, perfectly visible.
So while what is the session for? It is practicing and non-practice, I mean, chartered accountants, tax practitioners, heads of NGOs, and obviously who are learning, willing to learn about the compliance of trust and help the society at large. I will, after the seminar, give you an undertaking that you will know why and how to register for charitable trust, how to manage donors and be penalty free, ensure that your compliance is related to income tax and its application thereof are taken care of, and your reasons of cancellation and suspension of registrations are also at the end of the day identified, and therefore you will be able to add value to your trust or your clients and ensure that that cancellation or suspension is not done. I know in the majority, so I get regular feedbacks from everyone. In Bombay, obviously, there is the percentage is more than 50. But across the country, wherever I've traveled, I mean, I've been in Rajkot for a seminar. Last week, I was in Amravati. Everywhere before that, Nasik and all other places. Technically, I understand that registrations, cancellations percentage is more than 70% everywhere. I am aware of that fact. But if we take basic due care, I'm pretty sure we will be able to add value to our clients or to our trust. So this is my big promise today, that you would have all compliance related knowledge for charitable trust. You will ensure that your charitable entity is not deregistered, and you will obviously save the entities from disallowances and penalties. इस पे भी नहीं सारे delete हो गए हैं कैसे So this is a brief background of myself. I mean, as Sanjay ji has mentioned, I have been in practice for more than 20 years, worked with the been fortunate enough to work with the big four. I've been advisor to and consultant auditor to more than 50 entities, receiving 100 plus crores of donations from prominent industrial houses. Have written few books and have been honored to author a book recently, Charitable Trust Cutting Through the Complexities, which was published by Taxman and is available on Taxman website. I've been really fortunate that eminent several seniors have vetted the book and was really blessed that it's got a very beautiful review. So thank you to the God that He's given me this opportunity. So we all like stories in this world, and we Indians are known to have to listen to stories. I mean, सबको story बहुत पसंद आती है इंडिया में, बोलनी भी पसंद आती है और सुननी भी पसंद आती है. That's why not have a story at the start of the session? Let me also give a story, and obviously this story has a message too. So you must be wondering, why is this photo of Indira Gandhi, our late Prime Minister, on the screen, and what does it have the relevance to this topic that we are discussing? Once in the middle of the night, Indira Gandhi gets hallucination that God has come in, and God tells her that I will grant you 3 wishes. You can ask me any questions of the 3 questions, and I'll give you answers to those questions. So Indira Gandhi is very, very happy, and he says, let me ask my questions to God. I will get at least the answers to those questions. So the first question Indira Gandhi asks is that, when will my younger son Sanjay Gandhi become the Prime Minister of India? So God replies immediately saying, he will never become the Prime Minister of India in his lifetime. So Indira Gandhi thinks the Sanjay Gandhi never became a Prime Minister in his lifetime. He died in an accident. Then obviously Indira Gandhi says, she being a mother, she immediately asks the second question, God, when do you think my elder son Rajiv Gandhi will become the Prime Minister of India? So God immediately said, never in your lifetime. She looked at quizzically at the God, but then the fact is that Rajiv Gandhi became the Prime Minister after Indira Gandhi was assassinated in 1984. So now Indira Gandhi obviously being was thinking, how do I perplex the God? I have asked this question and immediately getting answers. And while she was getting harassed by her chief secretaries and secretaries in the office every day, so she said, "Let me ask God some tough questions. So he will also. I think if I can get an answer from him, I'll be very happy. Or else I'll perplex the God." So after a lot of thinking, Indira Gandhi says, "My Lord, this is my last question to you. As you know, I'm the Prime Minister of India, and all the chief secretaries and ministers keep on harassing me every day. So with saying that this is the amendment that I need to bring in this law, and this is the complex law, and this is the provisions of the law. So how can I ensure that in India we can have only one law which will be prevalent in the state of, and when will that happen?" So God was looking perplexed, and then after a few minutes, God replied, saying, "Never, that will never happen in my lifetime." So the point is, while charitable trusts have undergone a lot of complexities, the law unfortunately has become complex over the last few years, and there have been so many sections which have been added. The last count was about 38 provisions to this entire uh, registrations of section, I mean, the code of 11 to 13. But I'm pretty sure it is not that as complex as it has been made. And therefore, we can definitely ensure that we decode the complexity. As I have said, that charity needs to survive in India for the sake of underprivileged people. And therefore, the charitable trust needs to be registered. And obviously, they need to thrive in this country. So let me take you, that brings me to the important issue. If you remember, there was a provision amendment made to Section 12AB, bringing in Section 12AB in the amendment of effective 1/4/2021. The amendment was to amend the erstwhile Section 12AA. The earlier provisions 12A as well as 12AA were applicable for registrations. And if you see, anybody who was registered under 12A, earlier the provisions were such that once you were registered, for every 5 years you had to renew yourself. Then it was amended to 12AA, saying that once you are registered, it will be valid for the entirety. So majority of the people who have got themselves trust registered earlier would recollect those in the earlier days when there were manual filings and manual registers maintained by the income tax department. The registrations were recorded in a book, and those books had the exact registration numbers of the trusts, and they would be kept in a long book which could be turned around. However, when we moved from 12A to 12AA, this practice was somewhere stopped in between. And then, since there was no renewal technically, the department had lost a count of the exact trusts which are registered. That is the one of the reasons given for this amendment to be brought in. Now, under the regular registration provision, which is 12AB, the amendment provides that you are supposed to get registered under 12AB for all charitable entities which existed, or once any new ones which are there, which needs to be which wants to be created after 1/4/2021. There are 6 provisions, basically, six subsections which are applicable under 12AC 1 to 6. 12AC subclause 1 refers to regular registration, under which you get a period of registration for 5 years. Since you are already registered and your activity has started, therefore you need not file Form 10AB. I will come to what does Form 10AB refer to. if you refer to your registration certificate, which is issued in Form 10AC, 10AD, sorry, you have to do, you have to file the Form 10AC and you will get your order in Form 10AD. Your registration will be valid for 5 years, but subject to a caveat that you have to uh, redo the renewal before the end of completion of 4.5 years. So if suppose you have got, you are an existing trust on 1/4/2021, you registered under 12AC1 sub clause 1 and got the renewal for 5 years, you do not have to file Form 10AB subsequently, but your registration is valid for 5 years. However, you have to compulsorily do the renewal application in Form 10AC before the end of 4.5 years from the date you got the order. Mind well, though this is very critical because there is no provision in the Act to condone the delay. So 119 2B does not give the powers to CIT exemptions to condone the delays, and we are come across very many situations which I will take in subsequent parts where a lot of clients are facing challenges. Second type of registrations which are provided under 12AB is provisional registrations, which cover the registrations granted under 12AC subsection 1 from say 2 to 6, more particularly subsection 6, where you have new registrations or you had old registrations, but you do not have Form 12A registration or 12AA old registrations, and therefore you do not have the proof of you existing on 1/4/21. Then those registrations are given provisional registrations. So though you file the same Form 10AC, your Form 10AD will clearly mention order for provisional registration, and it will be valid for only 3 years and not 5 years. So here comes the catch. Here, what is Form 10AB? Form 10AB is a form which you need to file in case of provisional registration to state that you have started your activities. I will subsequently to say what documents are required to be attached with Form 10AB and how the Form 10AB will flow. But once you start your activity, within 6 months, you have to file your Form 10AB. If you have not started your activity, then you can have to go for a renewal, and you will have to again file for your renewal before 2.5 years are ended. Again, the same process, the form has to be 10AC and the order will come in Form 10AD. But you will have to file it before 2.5 years because, as I mentioned earlier, there is no provision to condone the delay. I regularly get calls from people saying what are the limits for applicability of the various audit forms as well as the various forms mentioned under the BPT Act or the Public Trust Act. And to that extent, let me make it amply clear. I know people, trusts which are having more than 300 plus crores of donations being received every year, and yet the trustees or the executives or settlers plus the consultants are signing documents without seeing what is the applicability as per the law. So I've tried to bring out the difference over here by mentioning the audit applicability and the forms that is there. So under the Income Tax Act, any amounts which are not chargeable to tax, gross amount that is where you will not be liable to file the audit reports. So technically up to 2,50,000 rupees, you do not have to file any audit reports. Above 2,50,000 is when the audit reports apply. So the form notified for in gross income from 2,50,000 and above to 5 crores is Form 10BB, and above 5 crores is Form 10B. However, if you receive any amount of foreign contribution from outside India, then even if you receive single rupee and your gross income is only say 1 rupee, which is your gross income which you have received from outside India, obviously it can only happen if you have an FCRI registration and you are registered under the FCRI Act. But still the Form 10B will apply and not Form 10BB, or as for a single rupee of donation contribution that is received voluntary, Form 10B applies. Apologies. Under the Gujarat Public Trust Act, which is a copy of the Maharashtra Public Trust Act, because they both started from the erstwhile Bombay Public Trust Act in 1950. If you see, the schedules 9A and 9B need to be given when there is income below 5,000 rupees. Above 5,000 rupees, your schedule 9A, 9B, 9C, and 9D needs to be given. And that is where I regularly get calls saying that, sir, ये 5,000 के नीचे रहता है तो भी हम 9A, 9B, 9C, 9D दे देते हैं, which is not actually required. 9C, 9D is your auditor's certificate, and I don't think it is required below 5,000, but that was the one reason which I wanted to point out this. I had said once you start your activity, you have to fill the Form 10AB, and technically what is to be attached. So you have to, whenever you get your provisional registration and you start your activities, then you are supposed to provide evidence to the department to state that you have started your activity, so that they could convert your provisional registration to final registration. Mind well, as I said in the earlier, once you start your activity, within a period of 6 months is what you need to file this application in Form 10AB. It has to be done online through your portal. Once you file the documents, the department has 6 months in which they will send you a notice requesting further documents. And then within the period of 6 months, they will have to either accept your application or reject your application given the basis of their acceptance or rejection, as the case may be. I would request you to attach as many photos, videos, or media reportings or any other documentary evidence that you have along with your application, because that could give credence to your application to say that this is the activities you are proposing to do or you are doing, and therefore it gives clear comfort to the department that yes, these are the activities being done, and therefore it helps you in conversion, helps them in giving you a favorable order from say provisional registration to final registration. Please also ensure that you do not, in your memorandum of association, if it's a Section 8 company, memorandum and articles, in the case of a Section 8 company, or in your trust deed or society deed, trust deed for societies, please do not put any such in your drafting these documents that you will take money from abroad or you will spend money abroad, because the point is very clear. When you are going for 12AB registration, it is understood that you will receive the money in India and you will spend the money in India only. That is a major part to be considered. Once you are registered under 12AB and you intend to do all these activities, then you can go for an FCRA registration before you get money from abroad or you spend money abroad. But this is what the department has been always pointing out, and therefore they have been asking compulsorily at the time of 12AB registrations itself, saying that you need to remove this, which at times causes unnecessary challenges. And therefore, I would request you to please be careful while drafting on this trust deeds or the MOA. So this is as far as the issues is concerned. I mean, the commencement of art. Let me take you what are the current burning issues in this area, which most people are facing. And the way I will sum it up is the major one is that people are receiving a lot of notices for incorrect claims or inconsistencies with audit report or their ITR. And if you see, a lot of people have got 133, 1A intimations saying that your ITRs do not match with your audit reports. A majority of these cases are that your audit reports are not filed properly or your ITRs are not filed properly and you've not claimed the exemptions or deductions or you've not filed in the recorded the transactions properly. So you need to, this is one of the challenges that everybody is facing. Secondly, can we revise the ITR audit report? If you see, circular number 2 has been issued of 2024, dated 5th of March 2024, where they have categorically said that if you had filed your original form 10B or BB for the AY 23-24, if you had filed in time in October 23, then you can file the revised file form 10B or BB as the case was be, by circular number 2 on or before 31st of March 2024. And therefore, I will say that this gives an answer to this burning issue. Do we need to generate revised UDINs to revise the audit report? My answer will be yes. Be very careful while issuing a revised report, because the challenge is that if there was a grave errors in the earlier forms that you have submitted, this could be construed as a part of uh, disciplinary committee issues, and therefore this could be taken up for disciplinary committees challenges also. And you obviously have the NAFRA on all of us, which is hanging sword. The other challenges are obviously we need to invest as per Section 11.5. All donations now need to be invested as per Section 11.5. Therefore, what we will soon see is that if 11.5 is people are not invested as per 11.5, then what happens? As I mentioned, if you don't file your Form 10AB within the period of 6 months of your commencement or activity or 2.5, then your registration gets cancelled because you have not, your registration is not converted from provisional to permanent. And therefore, the assessing officer is authorized, has been given unfettered powers to cancel your registration. And the challenge that is there, that if your registration gets cancelled, then the provisions of Section 115 TD, TE, and TF shall apply. For the simplicity purpose, I always call them as an exit tax. So we will come in the subsequent price, which says that what 115 TD, what are the consequences of 115 TD, TE, TF applicable applies to. This should cover basically why you need to file Form 10AB and also consists of the registration. And in the end, I shall obviously take the recent judgments of Supreme Court and High Court, which have been landmark judgments and which has entirely changed the way charitable entities have been the way you need to manage your charitable entities is undergone a dramatic change, and this is because of this recent Supreme Court judgments. I will, before we start this, I will also break in between and to add I want to share one document, which I will also share with the all the with Sanjay Bhai, who can in turn share it with all the participants. May I request just a minute? Just 1 minute. Sanjay Bhai, is my screen visible to you all? Can
Yes,
you
sir.
see
It is
this?
yeah, it is a report of the Controller of Auditor General of India.
So This CAG had done a performance audit of all the various charitable trusts and institutions in India. And this is report number 12 of 2022. It was tabled in the parliament it was presented on 8th of August 2022. And discussion happened on 16th of August 2022 in the parliament. The entire challenges they had analyzed about 7,000 odd trusts. So if you read this entire report, which is there, which is about 230 odd pages, it is available in public domain. I will be sharing also with with Sanjay Bhai, who can share with the participants. They've analyzed about 7,000 odd charitable trusts and over the period of 2014, AY 2014-15 to AY 17-18, and that is why they have come out with a lot of challenges, which, or rather, how the trusts were being misused as per them. I will request each of the participant over here to compulsorily, while we are sharing this document, the executive summary is about 7 pages, and the summary of recommendation is about another 6 pages, so total 13 pages. My sense is if you could read the entire report, it will be very good. But if not, then at least read this 13 pages. And it will give you a beautiful insight as to why this entire sea change which has come in has undergone and what we can see for the future. I am pretty sure there is a lot of changes which is going to come in the next few years. And I see you will get insight from this summary of recommendations, which obviously is part of this document. So I thought we should at least go through it together before we go back to our presentation. So I will be circulating this document for onward sharing, but my request to all of you to is please go through this document. It is a very, very beautiful document presented by CAG. So maybe it will help us to help to take care of our trusts, charitable entities accordingly. So I'm back to my screen. As I mentioned, Form 10AB needs to be filed, and there are provisions when do you have to file it. Obviously, what is the requirements and why is it to be filed? This I have already taken care of, and the validity period. I have also mentioned regarding the provisional trust and how it needs to be filed and when it needs to be filed. Obviously, the similar PPT will be shared to you from the organizers, and therefore all this can be taken care of. But this I have already covered. One small point which I want you to cover is that once for a provisional registration, you file Form 10AB, and so that first period of registration was for 3 years. Within 2.5 years, at any point of time, you started your activity. Therefore, within 6 months, you have to file your registration saying that you've commenced your activities in Form 10AB. If the department agrees with your contention and they approve your application, then your registration will be further increased by 2 years, because first you had a registration for 3 years, and will be further increased for 2 years to make the validity period for 5 years. That is why I have mentioned validity as 5 years in serial number 3. For renewal cases, I mean for the cases which are existing on 1/4/21, you are already granted for 5 years. And therefore, this was the only point that I wanted to make you aware of. This is also I have covered that what is the consequence of delay in registration. You will be gets converted into a non-charitable one, and the exit tax gets triggered. We will look at what is the exit tax, and therefore what happens is that if a new trust is not registered under 12AB, then it then cannot claim exemption because it becomes an AOP under 164, section 164(2), and therefore the entire proceeds that it has received is taxable at the maximum marginal rate under section 164(2). You cannot claim the benefits of exemptions under section 11 to 13. Neither, and this is more so because of the applicability of section 56 to 10 also. Department is very, very clear in this reason, and you are getting we see a lot of notices coming where the registration is not applied and it is taxed as AOP. And though you may have paid, because now the challenge is that if you ideally cannot, if you do not have a registration, you cannot file your ITR under ITR 7 because it wants you to compulsorily put the registration number, the unique registration number which you get when you file your Form 10 AC, which is your registration. And in the order under Form 10 AD, you get a unique registration number. So you need to put that registration number in the ITR 7, while an AOP has to file an ITR 5. So one of the inconsistencies which we regularly come across, as I mentioned earlier, that there are a lot of inconsistencies in Form 10AB and the ITR. People have been blanketly putting in their old numbers and filing the ITRs. The department does not, the central processing utility rejects them, and therefore the section 11 to 13 benefits are not granted to you, and therefore the demands are raised, even though you have filed a Form 10B or BB as the case may be, but your ITR, you do not get those benefits, and therefore the demands get created. Somewhere in the middle of the year, financial year 22-23, more specific in August 22, if my memory serves me right, either it is 16th August or 17th August. If I'm not wrong, it was 17th August 2022 is the date when the department amended Rule 17AA. Well, the reason given is that earlier, there were no powers to the department to call for, the records were not specified, and therefore they did not have the powers to ask for specific documents from the charitable entities, and therefore they were not able to cancel if the documents were not provided during scrutiny assessments or other notices. They did not have the power to cancel your registrations. And that is where in the middle of the year, the amended Rule 17AA, they have mentioned what books of accounts and other documents you are supposed to maintain. They have also specified that if you, during any of the assessments or any of the proceedings against with the department, if you do not provide those documents, if called for, then they have the powers to cancel your registrations. And therefore, what are the records which have been specified is what if there is a voluntary contribution received, then you have to maintain the name of the donor, the address of the donor, and you need to maintain any of this one of these documents, which is your PAN, Aadhaar, or a tax identification number, or passport, or elector ID, photo, identity number, or a driving license, or a ration card. Generally, I think PAN and Aadhaar is one of the most commonly used. You need to maintain ledger copies, cash books, journal, original bills, receipt vouchers, and all for records of your application, amount of application, name and address of the recipient, and purpose of application. Therefore, you will analyze that it is become very, very critical that you need to maintain every detail of each rupee that you spend as trustees or consultants, and ensure that your records are maintained. Otherwise, you will face a lot of challenges in future. So that brings us to a lot of compliances that we have come across, which you need to maintain for your charitable trust and applications thereof. Let's look at the sections where and what has been amended and what does it state. Section 11(1) very clearly says that what are the incomes that are exempt from tax. Therefore, any corpus donations that you receive, if it is deposited in as per section 11(5), then it is exempt for tax. What is corpus donation? Corpus donations are donations which are received with a clear intent from the donee saying that he wants you to spend towards particular objects, corpus objects. Generally, the courts have held that even if it is a verbal declaration, which is subsequently backed by a written letter in future, then it is valid. But I will suggest that given that you are not supposed to maintain these records, whenever you are accepting a corpus donations, please ensure take the corpus letters from the donee saying that this donation is towards the corpus of the trust. Needless to mention that you obviously have to take the PAN cards and or Aadhaar cards or any other documents that we've already mentioned earlier. Second is 15% of gross income. And I regularly get calls, and I will deliberate on this for a few minutes over here. Section 11.1 is very clear enough to say that if you spend 85% of the voluntary income that you receive or voluntary contributions that you are receiving, then 15% of the gross income is deemed to have been utilized. Please ensure or be very clear that it is a deeming provision. There is no standard deduction. I get regularly calls saying that, sir, you 15% to standard deduction. There is no concept of a standard deduction as far as Section 11 is concerned. It is contingent on you spending 85%. Then only the balance 15% is understood to be utilized and therefore is exempt from tax. If you do not spend your 85%, then the entire amount which is not spent, including this 15%, is brought to tax and you will have to pay tax and the MMR. Obviously, all the monies that you've received are now supposed to be invested as per Section 11.5 in the modes that have been specified over there. Obviously, income applied for charitable or religious purposes out of the remaining 85% is also exempt from tax because you have spent that money. That brings us to a point where what happens that if you could not apply that money, you may have received the money, but you could not have applied for various reasons. Let's analyze this. Typically, Section 8 companies have to maintain their accounts as per accrual basis because they are registered under the Companies Act. Majority of the trusts are free to follow cash basis of accounting and mercantile basis of accounting, but majority of trusts have now been following mercantile basis because they face a challenge of tedious reconciliations because the income would have been accrued. They invest in money as per Section 11.5, they deposit the money as per 11.5, and therefore your investments will obviously have it will generate some interest income, which will be subjected to TDS, and therefore your 26 AS will show you an income where the TDS would have been deducted. If you're on cash basis, then you will take that money in the year of receipt, whereas the TDS would have been deducted on accrual basis. So that is why majority of the trusts are now also running on accrual basis, where they recognize the income and obviously claim the TDS. So the classic example is the interest accrued. If you've recognized your interest received interest accrued on your investments, but you have not received the money, and therefore, while those interest amount will be also part of your voluntary contributions received, total gross income received, how will you spend the money? Because you've not received the money, and therefore you cannot comply with the provisions of Section 11.1 as you cannot spend the 85%. In that scenario, explanation 1, subclause 1 says that for any reason, if you've not received that money during the previous year, you may submit a declaration in Form 9 before the end, 2 months prior to the end of furnishing of the due date as per 139.1. This application is to be submitted online, and that income, whatever you've not received, you will be taxed in this year of receipt. It is deemed to have been applied in the current financial year. If you do not apply it in the subsequent period, then obviously it will be taxed at 30%. I will like to add one thing over here, that there is a circular number 6 issued on 23rd May 2023, where para number 13 to 15 states where they have said that this forms can be filed, though the law was saying that Section 11(1)(a) says that you need to file at least 2 months prior to the date of furnishing under return under 139(1). If anyway you have filed the circular, the forms 9 and 10 on or before 139(1), then it will be treated as valid and it will not be treated as delayed, is specified in the para 13 to 15 of the circular number 6 of 2023, which I mentioned. In the circular, they have nowhere mentioned that it relates to AY 23-24, and therefore, this being a beneficial circular, my sense is that it should apply for future periods also. This is my opinion, because there have been ample judgments to say that where there is a circular issued by the department which is beneficial for the assessee, he has the liberty to take it forward. And given that background, I think this should apply for future periods also. But my suggestion is that if you are able to clear for the subsequent periods, if you are able to freeze your account, file your Form 9 before 2 months, it is the best thing. Let us come to a part where you have received the money but not be able to apply that income for various reasons. And that is where Section 11(1) subclause 1B comes to your rescue. It says for any other reason. This is the only wordings that I used, for any other reason. And therefore, you can again file a Form 9. Yeah, same logic applies before those days. However, you will, while filing of the Form 9, you have to state the amount that you have not applied, and you need to apply that income stroke spend that income in the next financial year before you file this Form 9, or that is your 2 months prior to the date of furnishing of 139(1). I would like to also add that once you have obviously filed the Form 9, you will get a deduction because it is deemed to apply in the previous financial year. And therefore, in the next financial year, you cannot claim the same amount spent as an application in the subsequent financial year, because that will amount to double deduction or double application, which is not allowed. So to give an example, for AY 23-24, if you file a Form 9, assuming you have filed in time, and you spend the money before September 23, then since you are granted this, you have already, the application is already deemed for AY 23-24 of the amount that you had filed, you cannot get the same deduction again for AY 24-25. You will have to remove that much of application. Let's look at explanation 2. Explanation 2 says that when you give a corpus donation as to another, from a registered 12AB entity to another 12AB entity, that will not be treated as an application, and therefore the trust which is giving the donation will not be able to claim an application. Obviously, the trust receiving will become part of the voluntary contribution, because for them they become a corpus donations, and therefore the challenge is that they may have to spend 85% of the amount. Explanation 3 brings in that any provisions related to 40A3, 43A3A, 40A1A will also apply to the trust, like it applies to PGBP provisions. Therefore, if you make a single expenditure in a single day to a single person more than 10,000 rupees, it will be disallowed. Or if you do not deduct your TDS, then it becomes straight disallowance. 30% of the amount will be disallowed. Please mind well, I will go back to say that if you have applied 85% of your income, however, if you have not deducted while doing the audit, if you come across a situation where for some reason there was a TDS disallowance, and therefore under 40A1A you have to take a disallowance of 30%, and therefore your application may go down below 85%, then the entire balance amount will be treated as not convenient, and the entire amount will be taxed under 115 BBI, where you may have to pay under MMR. So please be very, very careful that all your compliances are related to 40A3 or 40A1A are complied with. I've already taken this. Another explanation 3A was inserted where any temple, mosque, gurudwara, church, or any other place notified under 82B, they receive any donations for repair and restoration or renovation, then they may be treated as corpus. This was more so to bring in the notified institutions, one of them being obviously the Ram Mandir at Ayodhya, where they had received substantial money and which they wanted to take it forward for the future. Obviously, they had to invest in 11.5, but this was done with that, keeping that particular thing in mind. Obviously, explanation 3B states that if 3A is violated, then the entire money becomes taxable. They have brought in an explanation 4, which becomes very, very important to note. After 1/4/21, if you receive any corpus donations and you make an investment when you do an application out of your corpus, or if you do an application out of your loan, in the periods prior to 1/4/21, you could have claimed the application in the year in which you spent the money from the corpus or you took the loan. Post 1/4/21, that is not allowed. They have made an amendment saying that if you are spending the money or doing the application post 1/4/2021 from your corpus or taking a loan, it will be allowed as an application in the year in which you repay the same. There is a further caveat added that that repayment has to happen within the period of 5 years. So technically, if you repay within the first 5 years, not the first, but in the period of 5 years from when you take the corpus, I mean, when you repay, when you make the application from the corpus or when you take a loan and you do the application, then it will be allowed in the year in which you repay in the 5 years on. So if you cross beyond the 5 years, then the amount will get lapsed. I have taken an example where in the previous year, a trust has applied for 50 lakh rupees of religious purposes for the corpus fund. It will not so therefore, as per the provisions in previous year 22-23, it will not be allowed. However, it has repaid 35 lakhs in the previous year 24-25, and therefore it will be allowed as an application of 35 lakhs in the year previous year 24-25 only now, as per the amended provisions. Similarly, if the trust takes a loan of say 80 lakhs from the previous year 22-23 to build a building, it will not be allowed in the previous year 22-23. That application of 80 lakhs will not be allowed. However, suppose it makes a repayment of 30 lakhs in the previous year 23-24, then the application of that 30 lakhs will be done in the previous year 23-24. And that is why if you see forms 10B and 10BB have been amended to incorporate this provisions saying that wherever there is any change, any repayment done or any application done from the previous years, then you have to specify it separately. You also have to specify where you have done an application in the current year from any corpus or by taking any loan and which is not repaid. So to that extent, you have to mention in form 10B and 10BB as well as in ITR 7, and it automatically gets captured accordingly. The ITRs are getting captured accordingly. So let me take an example to say how this will flow. Let's assume the income of the charitable institution is 2
Sir,
crores.
sir, are you
Yes.
changing your slide?
Yes.
So it is not moving from only it is one slide only.
Just 1 minute. Can you give me 1 minute? I would have loved you to tell me in that. Can you see it?
Yes, now it is clear, sir.
I'm really sorry that some of the screen, some of the portion would have been missed out. But anyways, I will Can you see this example that I'm taking, Sanjay bhai?
Sir, that we are seeing that your particular 2023, that slide is there.
Okay. I will now keep this like this only so that everybody can see this. I think this should be
Correct,
good
sir.
enough, right?
Correct. Yeah.
I will zoom it a bit so that it can
Yeah.
everybody can
So
see
here
it.
you are seeing the sample example like income for a
Right, right,
charitable institution borrowing
right.
years.
Yeah, I think we need to keep it this way only, otherwise it may not be seen. I'm really apologetic that we could not see the earlier screens, but maybe when we circulate, we will, anyway, the provisions have been taken care of. Coming back, this is a sample example that we've taken where we are showing the income. These are again numbers taken just for representation purposes and has no relevance whatsoever. The income that of a charitable trust is 2 crores. The borrowing that they've taken for this year is 4 crores, and the entire month they have spent 5 crores out of this amount towards the charitable purposes of the trust. Hence, out of this 5 crores, since 4 crores was borrowed and it will not be allowed in the year of application, therefore, we will have to remove 4 crores over here. The balance will be 1 crore, which will be applicable allowed. Out of the 2 crores that you have received voluntary contributions, technically you are 85% is supposed to be spent. Therefore, you are supposed to spend 1.70 crores. 85% of 2 crores, which is the voluntary contributions. However, in this case, you are spent only 1 crore, and therefore there is a shortfall of 0.70 crores because 1.7 minus the one that you spent earlier as per point number 5, and therefore 0.7 is the deemed application that you need to make under section 11.2 or 11.1. That is how then only you will your total application will become 1.7. This is the reason why, I mean, I've tried to bring in over here what can happen when you take an loan or a corpus, you outspend out of corpus, and it is not allowed in the year in which the application is done. I wanted to show it by way of an example. Obviously, there is an explanation 5 which has been brought in, which says that you are not allowed to set up or do any current year, carry forward the loss to subsequent years, because the assumption is that you would have spent from your corpus, which you have accumulated over the years of that 15%, and therefore it cannot be allowed in the subsequent period. And that is why they've brought in this explanation 5, where they say that you are not allowed to carry forward or set off this loss. Obviously,
Sir, one sorry to interrupt. थोड़ा स्क्रीन छोटा कर दीजिए ना, मतलब इफ इट कैन बी विजिबल. थोड़ा बड़ा हो गया तो कुछ चीज नहीं दिख रही. जूम आउट जूम इन थोड़ा कर. हाँ बस ओके. इट इज गुड सर.
right? Is it better now?
यस परफेक्टली फाइन सर.
Okay. Another provision is in 11.2. While in 11.1, if you remember, go back 11.1, explanation 1A and 1B had given you an option to file form 9 if you could not apply your income for whatever purposes mentioned over there. You have another option where you could accumulate your income for, so if you cannot apply your income, but you want to accumulate it for some projects, then you have to, under 11.2, you are supposed to file a form. That form is form 10, which is again to be filed online itself through your portal. You have to very specifically mention the objects for which you will be spending that money. That form is to be filed and you can accumulate that income for 5 years. Obviously, you have to invest the money in your safe instruments, which is your section 11.5 as per this mandate given under 11.5. What happens is, if you suppose file a particular object and you want to modify those objects for whatever reason, you will have to approach your assessing officer with an application saying that this is the objects that you had filed and you want to modify. You will have to give substantial proof, circumstantial evidence to prove that the reasons for which you cannot make that application, and the assessing officer has the powers to modify the objects also. If for any particular reason you are not allowed to, due to an injunction of a court, you were not able to spend the money or apply the money within that period of 5 years, and if you are able to prove it to your assessing officer, then that period of 5 years can be extended to to the period where you had in injunction of a court. We have come across situations where there have been operation or mismanagement applications filed with the charity commissioner in trust, and the bank accounts are seized by charity commissioner's office. They become a signatory, and then the powers rest with the charity commissioner, and therefore you cannot make applications of income. So to that extent, the periods will get extended. One of the very important points to be noted is that when you are making this accumulation of 5 years, once you have done this, you have to compulsorily apply the money, or that is spend the money in the next 5 years. If you do not do that, then it will be taxable in the end of the 5th year. Earlier, it was allowing you to, it was becoming taxable in the 6th year. Now that amendment has been made, it will become an income of the 5th year itself. In fact, in the current year's IPR, they have made a column where you have to specify the amounts that you have accumulated and the respective amounts that you have applied in front of them, and it automatically captures the entire data. In fact, I know in the past, people used to accumulate the money for 5 years. Then in the 5th year, they would bring it back as voluntary contributions, show the current year applications against them, and the current year's income would again accumulate for 5 years. So the teaming and leading processes used to happen, but those have completely gone off for the past future. Furthermore, you are not allowed to, so when you accumulate certain income, you are not allowed to claim that by way of giving it as a corpus donation. So you cannot give that money to any other trust or institution and claim it against this accumulation. You have to compulsorily do these expenditure only. I've been saying that 11.5, 11.5, what are the investment modes? The investment modes are basically government saving schemes or UTI or CG, central government or state government securities, post office banks, deposits of public sector companies or investment, bonds or approved financial corporations providing long-term finance, immovable property, debentures, where the interest of those debentures is governed by or finance is approved by the state government or central government. I have come across clients where there have been a lot of mis-selling happening, where debentures are being sold to charitable institutions in the wake of saying that you will earn higher interest, but those are issued by private companies, and the interest is not guaranteed by state government or central government, and then therefore you are not allowed, they are not valid under 11.5. You can make an investment to a mutual fund which is registered under 2023D, and that is also counted under 11.5. One point which I will also add over here is any trust which was formed under before 1/4/1972 and has received shares of a public company can continue to hold so, but those trusts which are formed after 1972 cannot hold those, even if it receives shares by way of donations, it cannot hold more than 12 months. It will have to compulsorily redeem them or sell them within the period of 12 months. There is a very famous judgment also, DCIT versus Piramal Group, Ajay Piramal, where this point has been noted, and this is a very landmark judgment which has been given, and you cannot hold shares more than 12 months. So that is where a lot of structuring is done today, where most promoters who have amassed substantial money and want to create their foundations or would reach in fact, all of you would have heard a very prominent businessman says on his 60th birthday, transferring a part of his shares to his foundation, pledging his shares to his foundation, and saying that my foundation will do the charitable philanthropy activities. But again, a lot of structuring is done in that, and because you cannot hold shares for more than 12 months from the date of receipt. they made an amendment to section 11(7) where the words paid have been put in. And what does paid mean? That now you will be only allowed an expenditure or application when you actually paid. Paid by means it has been, the checks have been cleared on or before 31st March of that year, and therefore no book entries are allowed. Even if you're following accrual method of accounting, you have to compulsorily ensure that your payment is done to claim application of income. One of the classic examples that you would have seen is audit fees. Generally, audit fees on accrual basis would have been booked on 31st of March, but now will be disallowed under 11(7), and therefore your Form 10B or BB as well as the IPR needs to be mentioned that very clearly what is the applications which are not which are booked but not paid, and therefore will be deducted under as per 11(7). I've taken an example where a trust has purchased a computer for the purposes on 28th of May, but the payment is done in the subsequent years, and therefore this application will not be allowed in the previous year. It will be allowed in the subsequent previous years. So let me take another example, and this will clearly show where these challenges of pre-amendment and post-amendments are there. Earlier, let's assume that you had received 400 lakhs pre-amendment and the same amount is received post-amendment. And the application is of the same is done of 360 lakhs pre and post remains the same. So if you look at the pre-amendments, 40 rupees was the amount of application which was not paid 31st March. Let's assume the same amount remains here also. Earlier, since this was not there for entire amount, 360 is allowed to be carried forward as an application. You are given, since you have spent 85%, you are granted 15% as deemed application. 15% of 400 rupees is 600, and therefore you are supposed to spend only 340 to claim the entire deduction under 11(1). But you did 360, you have applied 360, and therefore everything was non-taxable. Now let's come to the post amendment. 40 lakhs is not paid before the year end, and therefore, as per section 11(7), this will be not allowed to you as an application and therefore removed from 360, and therefore 320 will be the only one which will be granted as an application. 11(1) again very clearly says that 15% is the deemed application provided you spend it, which is 60 rupees of the 400. So you need to minimum spend 340. However, you have spent 320, and therefore there is a shortfall of 20 rupees. Either you make an application under 11(1) or 11(2) of 20 rupees to make the total entire application of 360, or you pay tax on it. So this is the challenge. This will bring out the difference between pre-amendment and post-amendment. They have amended the definitions of the relatives under section 13(3). And one of the reasons it has become very, very relevant is that all the transactions entered into with people under 13(3), you need to prove the reasonableness of them. And to that extent, any person who has made a donation of 50,000 rupees or more in any of the during the previous year also becomes a specified person, not apart from the relatives. The relatives are obviously author or founder or trustee or manager or relatives as specified in 52(2)(10) of the founder, donor or member. However, this being the first year, last year, they had come out with the circular number 17, where they had said that this persons from whom you have received 50,000 or more, and you do not have the details of those transactions, because 17AA was amended. If you remember, I had said earlier, 17AA was amended from or notified in the middle of the year, and therefore the details could have not been maintained by the respective trust during the middle of the year, and therefore this beneficial circular was brought in, circular number 17. From the future periods, obviously any person from whom you have received 50,000 or more, even in different tranches, you will have to maintain the record when they become a specified person, and any transaction with them, you will have to ensure that it is reasonable. Otherwise, the department has the powers to tax them. This already I have covered. I mean, when it can become an EOP. Another challenge is anonymous donations. So what is anonymous donations? Is anonymous donations are contributions received where you do not have any records, as mentioned, maintained by the trust. Because 17AA is already specified what the records you are maintaining. If anything you do not maintain records, then it becomes an anonymous donations, or even cash donations received above rupees 2,000 will be fall under anonymous donations. Section 115 BBC says that anonymous donations shall be taxable at the rate of 30% plus S plus surcharge. However, under 115 BBC, you are granted a limit which is 5% of your total donations, which is corpus donations, government grants, or voluntary contributions, or 1 lakh rupees, whichever is higher. And to that extent, it will that amount will not be taxable under 115 BBC. Rest amounts on which you have on which you have not maintained documents will become taxable under 115 BBC. However, this is applicable for charitable trusts. It is applicable for trusts which are partly charitable and partly religious. But 115 BBC does not apply to trusts which are registered as religious trusts, and therefore for religious trusts 115 BBC does not apply. I have taken another example to show you how this will apply. In all the three scenarios, we have taken that the total donations received in the year is 15 lakh rupees. In the first instance, you are receiving 4 lakh rupees where you do not have any records, and therefore it becomes anonymous donations under 115 BBC. 5% of the total donations of 15 lakh rupees is the maximum that you are allowed, or 1 lakh, whichever is higher. 15% of 15 lakh becomes 1 lakh 25,000. Sorry, 75,000. And therefore, it becomes 50 and 2,25,000. I'm so sorry, 2,25,000 or one, and therefore anonymous donations will be 3 lakhs. The balance will be taxable at 3 lakhs, and it will become donations at normal rate will be 12 lakh. Let's assume in the second scenario, 50,000 rupees is received. Since you are given a higher limit of 1 lakh, nothing will be taxable under anonymous donations. The entire amount will be treated under the normal rates, assuming you have not applied that income. If you have applied, then automatically that much reduction is there. Again, 1,50,000 is received as anonymous donations. 1 lakh is your higher limit given. 50,000 will become taxable, and the balance 50,000 will be taxed at 30% MMR, and 14 lakh balance 14 lakh 50,000 shall be taxable at the normal rates. One of the other amendments that has been brought in is that you have to, for all donations that you receive, voluntary contributions, if you are registered under ATG, then you are supposed to file Form 10BD. And it is to be filed electronically, and the recipient has to be given a Form 10B, the certificate, in a period of 1 month from the end of the year. The due date for filing to Form 10BD, maximum due date is 31st of May, but you can file any time before that, and you can keep on revising your Form 10BD. So where there are large trusts, they keep on filing regularly. However, if you do not file Form 10BD, even if at the year before the year end, which is 31st of March, 31st of May, then there is a penalty of 200 rupees per day, subject to a maximum of total amount received. And there, as on today, in your 26 AS or in your AIS, if you have made a payment and the trust has filed the Form 10BD, and given you a form in Form 10B, nothing is reflected in your 26 AS or your AIS. but I know a very senior person in the finance ministry, and they have been given an internal target of 12 months, but the prophesized target is 18 months. Within a period of 18 months, once you receive the Form 10, once you give a donation, the form is filed, 10BD is filed, and you receive a Form 10BE. Your 26AS shall also capture, 26AS and AIS shall capture the details, which will shall automatically get populated in your ITR also. So this is the way forward that we are going as far as the integration is concerned. I've already covered this. So if you don't file your 10 BD, then there are 200 rupees penalty or the maximum of donations received. I had already said that at the time of if your application is short, there is a shortfall of 85%, or your amount is not invested as per 11.5, then under 115 BBI, 30% straight tax is applicable. If you remember, I had given you an example that suppose if you have applied 85%, but let's assume due to the TDS disallowance, your expenditure, your application becomes 84 rupees or less, and therefore the entire balance amount will become 16 rupees will become taxable. You will lose the exemption deduction under 11.1, and therefore 115 BBI, 30% straight tax becomes applicable. One other very, very important amendment that is brought in is section 115 TD, which I refer to as exit tax. So if you convert your trust into a form which is not eligible for registration under 12AB or 1023C, that means you had registration earlier, but somehow you did not get yourself renewed, or you do a merger of trust, because under the Bombay Public Trust Act, the Maharashtra Public Trust as well as the Gujarat Public Trust Act, you're allowed to merge trust. But be very, very clear that your objects are similar, because we come across a situation where objects are not similar, they are not registered, and if they are not registered, you are automatically that merger is not valid, and section 115 TD applies. Or if you have dissolved a trust, technically once you apply for a dissolution and you receive an order of dissolution, within the period of 12 months, you are supposed to distribute the assets, entire assets which are left out on the dissolution. If you do not distribute the assets within a period of 12 months from the date of order, then also the remaining assets, section 115 TD will apply. What does section 115 TD says? It says that the entire amount accredited income shall be liable for tax at the rate of 30% plus surcharge plus cess. As I said, the exit tax. One point which I will also like to mention over here, if you are doing any modification or undertaking a modification up to your objects, then please ensure that while you are registered under 12AB, you file again the modified, you apply for a registration under 12AC15 with the modified within a period of 1 month from the date of modification, and you take a re-registration, because if you don't do that, again 115 TD applies. You are given a period of just 1 month to apply. If you've done any modification in your trust deed or your MOA, AOA, then you have to compulsorily take a renewal registration under 12AC15. Rest I have already covered. So what is this accredited income, and how do you compute this accredited income on which you have to pay tax at the rate of 30%? The accredited income will become the aggregate fair market value of your total assets as on the date of the applicability of 115 TD, less the liabilities as on that date. The balance becomes your total income, accredited income, and on which 30% plus surcharge plus cess is applicable. So the words used are fair market value, and therefore be very clear that if you have a very old trust, then this could lead to a lot of complications, because the assets would have grown over a period of time, whereas there would not be any liabilities, and therefore you may have to end up paying tax on that amount. Obviously, assets acquired out of agriculture income will not be part of your 115 TD accredited income, or where you have paid tax on any of this income in the earlier years. Then obviously that much portion of income shall not form part of the accredited income. Specified date I've already mentioned. I mean, registration granting date is the date of registration under 12AB or 1023C, or if you've done a modification, then on the date of adoption of modification. If you've done a merger, then date of merger, and if you've done a dissolution, then date of dissolution. This is very critical because this will become the specified date for your calculation of accredited income for FMV purposes of assets and liabilities. Obviously, you can appeal against these orders, and there are dates within which you need to file appeal with ITAT or for this going against this cases, which obviously are mentioned over here, and there'll be interest also applicable under 115 TE, and the principal officers as well as the trustees shall also be deemed to be in default under 100 section 115 TF. How much time do I have, Sanjay bhai? I can't hear you, Sanjay
Uh,
bhai.
yeah, sir, you just continue. It is very interesting discussion is going on. Sir, one question, if you can take a few question, if you have, then we will move.
If you can give me 5-7 minutes, I should be able to wrap up, and then I think
Yeah,
we can
please, sir,
take
please, sir.
we can take all the questions together. For I will ensure that I will respond to each and every question of the participant before I go. So let me try and finish it rapid in less than 10 to 15 minutes, and then we'll take all the questions.
Sure, sir.
So, as I have mentioned, there have been recent judgments of the Supreme Court. There have been two landmark judgments delivered by the Honorable Supreme Court in 2022. One is the judgment of ACIT exemption, which is Ahmedabad Urban Development Corporation, 449 ITR SC. If you look at these judgments, typically, and in this judgment, in fact, there are a lot many parties to this judgment, litigants, including BCCI, including our own institute, and many other people along with Ahmedabad Urban Development Corporation. One very critical issue is that these are judgments of 3-bench divisional judgments, and therefore 3-bench as well as 5-bench, and therefore the orders are valid constitutionally also. Secondly, these judgments are prospective. The Honorable Supreme Court in its mind has said that these judgments could have a very vast implications, and the court has been gracious enough to say that it shall apply prospectively and it shall not apply retrospectively. The Honorable Supreme Court has gone and overruled their own judgments. It has mentioned in the order itself that they are overruling the old judgments. So your old judgments of Surat Art Mills, Oxford Education Society, and many other such judgments have been overruled. And the Supreme Court in its own mind has given the reasons why they feel that it is time that they need to overrule these judgments. The basic issue under this judgments was that, as you most of people would be aware, there are 7 activities which a trust or a charitable entity can do, and which has been defined under Section 215 of the Income Tax Act, 2 subsection 15, which notably says you can do education, you can do medical relief, you can do relief for poor, preservation of natural forest, or afforestation, and many other water for sheds, yoga. And these are the 6 activities which are covered in the 215, 1 to 6. The 7th is very, very critical, and it says any other general public utility of public nature. This is the 7th item which is mentioned under section 215 over there. There is a proviso also to this 7th item which says that if you are having registrations under the seventh item, which is in the general public utility. And then if you're doing any business activities, your receipts from those business activity cannot exceed 20% of your total receipts, including voluntary contributions and other government grants. But this is applicable only in case of the seventh activity, which is if you're doing any other general public utility. That provision does not apply to the provisions of 215(1) to 6. I will come to a subsequent slide also where there is a recent judgment where they have said that it does not apply to education, medical relief, and other things. Relief to poor, which is your 1, 2, and 3 under 215. And therefore, I will say that that judgment shall help that it will not apply to 215(1) to 6 itself, and only will apply to 27 judgment will apply to 215 subclause 7. Coming back, if this therefore this both the judgments say that if you are doing any activity in the nature of trade, commerce, or business, and they are treated as incidental activities, you need to maintain separate books of accounts. Furthermore, it says that you need to only charge substantial markup over cost. They have the Supreme Court has defined how do you calculate markup, substantial markups, and have been very categorical enough that you need to mention, you need the trust can or the charitable entity has to ensure that it receives only nominal profits. The idea is that they are very clearly now saying that you cannot make huge profits over your cost. So the challenge is that now you have to prove that whatever you have made is just a substantial markup over this cost. This is relevant in case of many educational and medical institutions, which all of you would be aware that where there was substantial markup over the cost, and now or any other development authorities, and therefore everybody is facing a huge challenge, including BCCI, including institute and many other such organizations which are registered under 12AB. Another landmark judgment is of New Noble Education versus CIT, again given by the Supreme Court in 2022, 444 ITR, where it says if you are engaged only in the case of education, and again, if you need to only do charge nominal profits over your cost. One important point which the Supreme Court has also covered over here in this judgment is that they've said that if any of a local law applies to you, and if you're not registered under local law, then you can be denied exemptions, and your exemptions under section 11 to 13 will be removed. Why I have mentioned this very specifically is that we have come across situations where we have local laws. I will give an example. There are 5 states in India where charity commissioner is applicable, which is the state of Maharashtra, Gujarat, Goa, and Madhya Pradesh and Andhra Pradesh. So technically, if you are not registered under those laws, there could be a denial of exemptions. Secondly, there are temples which are registered in Rajasthan. There is a law called Rajasthan Devasthan Act, and where many charitable entities which have not got themselves registered under the Rajasthan Devasthan Act, though they had registered under first 12A AB, 12AA, or now have taken under 12AB, and then their registrations are getting rejected using this particular portion which is mentioned part of your judgment of the Supreme Court. So I wanted to bring out an example where the same law has been put to use and is being applied for rejections all across the country. You may have many other local laws. Obviously, India being a big country, I am, to my limited knowledge, aware of some more similar things, but not maybe all. Similar judgments. One, as I mentioned, this is a recent judgment of the Bombay High Court where it is in Fine Arts Society versus Deputy DDI, CID, DIDI exemptions, with the written petition 25541 of 2015, where they have said that 215 shall not apply to the provision of 215.7 shall not apply in case of relief of poor or education or medical relief. And therefore, as I said, in my honest view, it should not apply to even 1 to 6, given this red petition directions of the High Court. It shall apply to 215 Part 7 only. And therefore, if you're doing any activity which is the incidental and the receipts thereof exceeds more than 20%, it shall not apply to 1 to 6. Another recent judgment of 2024 of the High Court, Mumbai High Court, is Sri Ram Ashram Trust Nasik, where the case is where the trust would have received would be holding some property which is it has sold and received the consideration, say in any previous years. However, due to some reasons, it has not been able to do registration, and then in the subsequent years when you do a registration, obviously you would not receive any consideration in the subsequent years, but the index 2 of your registration document will give you the market value. And in these cases, the department is sending a 148 notice for any earlier years, as well as giving a scrutiny notice for the current years, where because the agreement value is 0 and the market value is obviously determined as per the stamp duty value. We have recently come across a situation, live case with us, and where we have won this on this similar judgment. In our case, the SSC had sold a property in 2001, received the entire money in 2001. They had applied to the charity commissioner to say, because in Bombay, the state of Maharashtra, if you if you have if you undertake any long lease, or if you purchase or sell any of your immovable properties, then you have to take prior permission from the charity commissioner. So the trust had applied for a prior permission of the trust to sell the property. It had got the permission and entered into the transaction, received the money from the buyer also. However, the buyer could not do a registration for whatever reasons. Subsequently, in 2007, again, the SSC had applied for again powers from the instructions from the charity commissioner to enter into registration. The charity commissioner had made a mention also that the entire money has been received. However, the purchaser has not done the registration for reasons noted in the order. Unfortunately, even after this order, the registration was not done for various reasons. The registration was done in 2022, obviously after taking again prior permission of the charity commissioner. And then again, the order was mentioned very clearly that this registration is sought to be done. Recently, all these documents approved. Department had issued a scrutiny notice saying that you have not offered this income for tax. Your agreement is of 2001 and you have received a amount of rupees X, whereas the agreement value today is much higher as per the Stamp Duty Act, and therefore 43 AC and 50 C shall apply. So the difference is ought to be brought under tax as per this. This was the judgment. This was the issue. Based on this judgment, as well as similar provisions, we have done a litigation, and I am very happy to say that the order is passed, wherein they have said that yes, where the consideration was received and the possession also of the property was given. However, you could not do the registrations because of the challenges faced by the purchaser. Then the provisions of 43C and 50C shall not apply, and therefore the amount will not be taxed. So this is a very good judgment, which will be beneficial in case of most people. I come to circular number 3, which is issued on 6th of 2024, which is issued on 6th of March 2024. If you look at one of the amendments of the 2023 is that when you are making a donation to from when you have received a voluntary contribution, so a trust or a society or a Section 8 company which is registered under 12AB receiving voluntary contribution is giving a contribution to any other registered trust under 12AB or a society or a Section 8 company, then if it will its donations will be restricted to 85%. So the application will be restricted to 85%. This is again a fallout of the audit report of CAG, which I had shared earlier. So let's assume an example. A trust has received 200 rupees. It gives 100 rupees as an application to another trust. Mind when this is not mentioned allowed under corpus donations, but I'm referring to voluntary contributions. Now what they're proposing is that only you will be allowed, though you have spent 100 rupees, you will be allowed a deduction on an application of 85 rupees only. Given that background, a lot of representations had gone to the department saying that while on one side you are saying that we will give you an application of 85 rupees only, but the trust would have paid 100 rupees. So obviously that 15 rupees is not there with the trust. On the other hand, you are saying that any money that is not given as an application has to be compulsorily invested in 11.5. So while we have given 100 rupees as an application to the other trust, you are giving us 85 rupees only, but we don't have that balance 15 rupees to be invested in 11.5. So that was the representation made to the department. And that is why this consequential circular number 3 of 2024, which has come in on 6th of March, they are saying that if you make a donation of voluntary donation of 100 rupees to any other trust, obviously you will get an application of 85 rupees, but you need not make that. Obviously, since you do not have that 15 rupees, you cannot make that investment of 15 rupees, and you did not make that investment of 15 rupees in the app under 11.5. The challenge that I see and which I've given by this example is that, see, as per law, if you've received 600 rupees and you give donation to other trust of 200 rupees, you are supposed to spend, you will get an application of 85 rupees, 85% of 170. As per circular, you are supposed to apply 85% of 600, that is total 510. The deemed application is 170, which is 85% of 200. Therefore, balance 340 is what you need to spend. So only 60 rupees will be allowed to accumulate. Whereas as per law, what should have been that only 170, 85 rupees, 85% of 200, it should have been allowed. Out of 600, 430 is the balance. If you've applied 340, then 90 should have been accumulated under Form 9 or Form 6. So to that extent, if you see, this is the anomaly which is being created by circular number 3. Unfortunately, what they were trying to plug the loophole, we are going back to the erstwhile scenario. So if you see this, another example, this is out of the example that is given in the report, CAG report, which was the basis. And in fact, this is also mentioned in the memorandum of the Finance Bill 2022, where they've clearly said that they've come across many of the trusts where people were giving donations to each other and claiming 100% application, while though they were spending only 85%, because if they spend 85, then the balance 15 have to be into spend. If you look at the report of CAG report, CAG had very categorically said that they had come across 4 trusts which were doing some situation out of the 7,000 trusts. And however, in the memorandum, it has been said many of the trusts. I understand English language is a very funny language, and therefore 4 means many. But my honest submissions, 4 out of 7,000 trusts cannot be a population for you to bring such a draconian amendments. But since that is what it is, then we have to live with it. However, this has been amended, and therefore the circular brings us back to the earlier situation. And so somewhere I feel the legality of this challenge could be also challenged in future, because you cannot have a circular which can override the law or the provisions. And therefore, to that extent, my suggestion is that it could be challenged at some point of time. But as soon as that, probably time will come back over there. That brings me to a very important reason. If you analyze what are the major reasons of suspension or cancellations of the registrations, and if you analyze this, the reasons are that majority of the time the trust is either for a religious nature, created for a religious nature, or the objects are not charitable, or it is what the objects are existing are for the benefit of a particular settler or a trustee or their relatives, or it is created with the intention of benefiting a particular class, creed, or community. And that is why the majority of the rejections happen. At times, there is a huge challenge in proper due diligence is not done for at the time of application or creation of the trust deeds, or in creation of the MOA, drafting of the MOA, AOA. One important issue which I will like to bring to your notice over here is that in the old trust deeds, we have come across this quite rampant. And that is why we tell that you need to make this be very clear while drafting of the trust deeds as well as the MOA, is that you need to have a irrevocability clause in that trust deed. In fact, it is a mandatory part. So when you file Form 10AC, the department is asking very clearly whether the irrevocability clause is there in your trust deed or in your MOA. If not, at the time of registration or renewal, they are not renewing it. While the Bombay Public Trust Act, so that brings us to one more issue. The Indian trust deed very categorically says that once a trust deed is formed, it can be amended only by an authority not below the level of city civil court. So the trust deed can be amended by a level not below the city civil court or any higher courts. And all the participants will agree that today, if you approach city civil courts, then your children, by the time your children will grow up, they will get the judgments. Unfortunately, that is the timeline that is going in city civil courts. So please be careful. However, in cases where there is charity commissioner, and which is also there in Mumbai, Maharashtra Public Trust Act, there's a section 15A, which says that grants the charity commissioner to formulate, or the trust can formulate a scheme, and the charity commissioner can approve the scheme under section 50A. Once this scheme is approved, the scheme will partake the nature of trust deed. So the trust deed will be replaced by that scheme, which is approved by the charity commissioner under 50A. And then you may go for registration under 12AB, and the trust deed will be over. So the scheme will override the trust deed. This is the limited point I wanted to make. So therefore, please make proper due diligence while you are doing drafting and other other issues at the time of registration. I'm also aware that the majority of these trusts have part-time accountants. In fact, many of them cannot afford full-time accountants. But in fact, I take back to a beautiful article written by a chartered accountant, Sri Gautam Naikji, and everybody knows him very much. He had written a beautiful article which was published in the newspapers about a month or so ago, where he said that gone are the days now where you can run a trust uh, with part-time accountants. Unfortunately, this has become a full-time activity, and therefore you need full-time accountants. I know it comes with its own share of challenges, but this is one of the major reasons that we've come across for cancellations or suspensions. I have already covered where it is not irrevocable. Say last one challenge which we have come across is non-reporting of changes. So typically where you have charity commissioner's office, you are supposed to file change reports. And there is, if there is any change in your committees or in your trustees or any other major changes, then you are supposed to file change reports. And which is leading, if those change reports are not filed, then the registrations are being cancelled or suspended. In fact, in the state of Maharashtra, majority of the bank's accounts are being freezed because the KYCs are not done. In fact, the banks are compulsorily pushing the charitable entities to at least give the acknowledgements of change reports being filed. The banks are lenient enough. There is an internal circular guidelines given by the Indian Banks Association to the banks to say that you need not press that these change reports, the order under the change reports be taken, because it takes a while for the order to be, I mean, once you make an application, the charity commissioner being a quasi-judicial body will take its own time to get the order done. Therefore, the Indian Bank Associations have gone ahead and said, given internal circular to banks that you need not press for the order. But yes, you need to take an acknowledgement from the charitable entity that all their change reports have been filed for KYC purposes. Unless we've seen that many of the bank's accounts have been got freezed, and therefore you cannot do any applications out of the voluntary contributions that you receive. Again, you lead to reason of cancellations or suspensions. So this is the major reason that these are the reasons of challenges which or complexities that have got created. And I think each one of you will ensure that you um, overcome them, your clients overcome them and take action so that you don't face any of the penalties or challenges. As I said in the starting, charity has to thrive in this country for the purposes of underprivilege, and you ensure that all your compliances are taken care of. A big thank you from my side. As I said here, I'm available for all the answers and to give you the answers to the best of my judgment. If in case I cannot give you any particular answer, please be rest assured that I will try and send an email to the answer. But I'm here to answer all the queries that you have now. Yes, Sanjay bhai.
Yeah, thank you.
Thank you.
Hello. Yeah.
Yes, sir.
Yeah, so thank you so much, sir. It is very interesting thing that you share. So let me take quickly the questions because uh, there are many questions. Sir, one questions that is we received and that you talk about the change of trust. I mean, in a memorandum. So it is like a change of trustees also need to report or like
Yes. Yes.
okay, change of report, change of name, change of address, anything that we are going to change. So then we have to reapply.
You have to
Sir, this
intimate.
was my question. May I intervene here?
Yeah, Preeti
Yes.
ma'am, please.
Yeah. So basically, like none of the trustees which were originally there, we are about 32-year-old organizations. So none of them are there, except for like maybe one of them is there, but he's also there because he's so old, and rest of the trustees decided just let him to just let him be. But now, since all the trustees are new, what should we do? And since you just mentioned, like if we go to the civil court and how much time it takes, maybe my daughter will see the change happening. So what is the best way out here? What is your advice?
I'm assuming you are not in those states where there is charity commissioner. Am I correct?
No, we are Delhi based organization.
Yeah. So in Delhi, there is no charity commissioner's office.
Yeah.
Technically, I will suggest that you do at least, and you obviously trust deed cannot be amended. You you will have to add a trustee and then go for a modification and file with 12AB under 12AC 1 subclause 5.
That's a technically right answer. 12AB subclass.
5. Modification of objects.
This will come under modification of object since we haven't changed any of our object.
Yeah, but you have changed your trustee, so that is the only other subject left.
Okay, so there was one more query that I had put up. Salaries payable usually are always there by the end of the financial year. So are they also not considered as spent?
The wording used in 11.7 is paid.
Yes.
They have now categorically made that amendment to say the word used is paid. And therefore, paid means actually paid and not credited.
Okay. So they have to be considered only, they'll be considered only when they are paid, even the salaries and everything.
Because if they had this in mind, they would have written paid or credited. They have not used the word credited. They have deliberately used the word paid.
So there was one more question. I'm so sorry, I'm bombarding with you. You with
Yeah,
all my
please,
questions.
Neeta ma'am, go ahead.
एक आपने सर बात करी थी सुप्रीम कोर्ट ने ये मेंशन किया है कि सब्सटैंशियल मार्कअप्स जो हैं तो सर ये कहाँ से डॉक्यूमेंट मिल पाएगा where we know what the substantial markups are जहाँ पे
So
business activity
there are both judgments of the Ahmedabad urban development as well as the new noble. I have given already citation. They are available in public domain. If you do a simple Google of it, you will get the judgments. However, if you want, I can send it to Sanjay bhai, who can circulate it to all the participants.
Sure, sir. So whatever material that you have given to us, we will create a drive and we will share with everyone, sir.
Yeah, because those are available in public domain. In fact, the CAG report, this Ahmedabad urban development judgment, new Nobel education judgment, they are available in public domain. These have been landmark judgments, each running into 100+ pages. And the Supreme Court in its might.
lay people like us understand.
Ma'am, I think if you read the judgment has been very, very deliberately. So the Supreme Court in its mind has, it is not technical, I will say. They have analyzed the provision in a very meticulous manner and they've differentiated what were the earlier provisions and why are they overriding the earlier judgments. They have given their reasons for it. I understand a bit of it is technical, but if you go through them, even from a layman's perspective, you should be able to get a lot of insights from it.
Thank you.
Sir, I think one question is like, suppose you talk that there is a provisional registration of 12AB. If like the organization has acquired 12AB and they started the activity and they have not applied in within 6 months, then what is the case, sir? If they applied, they will reject, or is there any possibilities?
So the challenge is that let's take it, there are two examples I will take. One is you had a trust, or let's for a simplicity take examples of two trusts. One, both have been registered under 12AB sub 12AC 1 subclause 6, which is any other, and therefore you get provisional registration, which is valid for 3 years with a caveat of renewal of 2.5, or you have to 2.5 years. And it also comes with a caveat that you have to, within 6 months of starting of the activity, you are supposed to file Form 10AB. These are applicable for both the examples that I'm taking. In the first example, you have a case where you started your activity but not filed the Form 10AB within 6 months. Typically, the assessing officer can reject your application. However, there is a Jaipur ITAT bench judgment of Gram Green Panchayat, where they have said that the assessee, the CIT exemption does not have the power, but to condone the delay. But it can give you the deduction from the year in which you made the application. So what that judgment is saying that suppose, let's assume in year 1, you started your activities Therefore, in the first 6 months itself, you were supposed to file the Form 10AB. You filed it in year 2, right? Even after the expiry of 6 months. So, and while that Jaipur ITT bench, Go Green Kamchand Foundation, has very categorically said that the CIP exemption does not have the power to condone the delay in filing of that application of Form 10AB beyond the period of 6 months. Yet, he has the powers to at least grant you the registration from the period under which you have filed the Form 10AB, and therefore the application should be granted from the year 2 in our example, though in the year 1 you will not be registered, and therefore the provisions of MMR, 115 BBC shall may get triggered. That is a separate issue. But this is the recent judgment that has come in, which is at least beneficial in those cases. So I hope I have brought in the example that you were saying in those cases. You have one more case where, in my second example, though you have a provisional registered trust and you did not start your activities, therefore you did not file your Form 10AB, right? You are supposed to go for renewal after 2.5 years. You somehow do not renew after 2.5 years. You do not file your renewal application under Form 10AC in before the stipulated period of 2.5 months, but you do so before the end of 3 years, within that last 6 months. In those cases also, the CIT exemption does not have the powers to condone the delay, and therefore they are rejecting your application, and their 115 PD is they are initiating the provisions of section 115 PD. So these are the two bifurcations or two examples that I wanted to bring in to say that what happens in case of provisional registration if you delay in filing of your 10AB, also in filing of your renewal if you do not have started your acts. I hope I have answered by way of the example.
Okay, so now what is the simple understanding is like if the organization has started the activity, it is advisable they can submit the 10AB as soon as possible.
Absolutely.
Right, that is number one. And number two that you talk about, sir, suppose they have not started the activity and they have not go for a renewal in 2.5 years after, and then again they have opportunity for a 12AB, isn't it?
Yes.
They can go again for a 12AB fresh registration.
The challenge, yes, you can after 2.5, but before 3 years, are you referring to, or after 3 years, are you referring?
After 3 years, sir.
After 3 years, you can again go. But the challenge is that your 3-year period, right, since that renewal is not done, for those periods, you become unregistered, right? And therefore, you lose your exemption, and therefore you become an AOP.
Sanjay sir.
Okay. Any question from participant, please?
सर मुझे ये पूछना था कि
नाम
सर मेरा आवाज आ रहा है ना?
कौन बोल रहे हैं सर?
डॉक्टर दिलीप बारसागड़े सर, स्पर्श
हाँ
गढ़चिरौली से।
हाँ, दिलीप जी बताइए सर।
मुझे ये पूछना था क्योंकि हमें प्रोविजनल 12A और 80G का सर्टिफिकेट मिला था, तो हम भी इस इंप्रेशन में थे कि वो 3 साल के लिए वैलिड है, लेकिन जब हमने देखा तो उसमें फाइनेंशियल ईयर 23 to 24 था, तो ये 31 मार्च द लास्ट डेट, तो उसके 6 महीने पहले हमें रिन्यू का एप्लीकेशन करना चाहिए था, लेकिन हमने अभी वो जनवरी 12 या 13 में कर दिया था, 2-2.5 महीने पहले हमने सबमिट कर दिया था। तो इस केस में हमारे साथ क्या होगा अभी?
So, sir, I have had live cases from my friends. Unfortunately, as I said, they have lost their exemptions, and the only situation is then filing appeals.
ओके, अभी तक हमें कोई रिप्लाई इनकम टैक्स ऑफिस से नहीं आए, तो क्या हमें जब तक रिप्लाई नहीं
So
आता
you
तब
have said that the income tax department has 6 months from the date of your application to send you a notice. Obviously, you will get a notice.
सर जो टैक्स बता रहा है, जो MMR आप बताया, दैट इज एप्लीकेबल टू ऑन अ सरप्लस और ऑन इनकम साइड.
On
Suppose one
income.
organization receive the grant, and they have utilized the grant, then
So the way it is, sir, the department's view is very clear. If you lose your registration, then suppose you received 100, you did an application. Even though you did an application, you are not granted the benefits under section 11, 12, 13, and the entire amount that you've received is subject to tax at MMR. They are very clear. In fact, this is as per section 56(2)(10), read with section 164(2), and therefore department is blanketly raising demands straight on the contributions received without giving you the application under section 11, 12, 13, even though you have paid those amounts. The
okay.
only limited in some of the orders they are giving benefits is the admin and establishment expenditure is being allowed. Rest obviously is not being allowed.
Okay, and
I
sir,
have a
like,
live case. I have
and
a
sir,
live case.
and
Just
suppose,
to
sir, if any organization like you talk that, and the current, let us take example of current financial year, right, sir? And if they applied for 12AB registration, now it is a March, right? And they apply today, for example, or maybe tomorrow, and maybe they rejected that. Well, I mean, they not grant the certificates. Then what happens, sir?
so your contributions received, they will initiate provisions of section 815 TDEF along with notices. So they will not give you the benefits of application for the current year, and therefore it will become taxable.
Okay, so they will not consider even this year also.
Yes.
Okay.
Because the issue is that if you see Form 10 AC, your registration, Form 10 AD, which was your registration, it says that it is the entire order is subject to certain conditions in the order. And in the order conditions, it's very specified that you will apply for once within that period of 6 months when you start your application, your activities, or you will go for a renewal. So your registration is contingent on those particular conditions.
And sir, you also talk about some local tax related concerns. So like one thing is like professional tax, and I observed that the many organization, especially the NGO, they are not taking any registration with the municipal corporation or maybe gram panchayat. So professional tax is, if they are not comply with the professional tax, then what, sir?
See, I will say that this is a Supreme Court judgment, and to that extent, Supreme Court has very categorically just said that if you do not apply to local laws, the powers go to the assessing officer to reject your or cancel your registration. So, yes, there are unfettered powers being given, but I honestly believe that at some point of time, those powers cannot be misused to deny genuine. Yes, where you have issues of registration, compulsory registration, yes, you may still use it. But in cases like your profession tax, where the tax impact is not that great enough to ensure that you cancel the registration, then I'm pretty sure you are taking the Honorable Supreme Court's remark to a different level or extrapolating it to a different level, which was not the intention of the court, and therefore, obviously, someday it may get challenged.
Sir, one question that we received from Asha Madam, sir, what about the donation? Asha ma'am, would you like to write again, because...
Yes, sir. Yes, sir. Sir, sometimes for construction and all, we receive some donations in kind, like cement bags, iron and materials. How to account those things, sir?
Okay.
The donors
So
will not be giving any details. They will just send the material.
unfortunately, it will be construed as anonymous donation when you have your challenges or limits of anonymous donations. If you are within that limits, you are fine. Unfortunately, otherwise you have a challenge. In fact, I will give an example where suppose I come across many trusts where they keep
Yes,
QR codes.
Hmm.
Nowadays, it's a fashion of keeping QR codes and receiving money by UPI. But you don't take the PAN cards or Aadhaar cards of those people. Those people will pay by UPI and then walk
Yes,
off.
sir. Yes, sir. Yes, sir.
Again, you have a challenge of 115 BVC over there because if you look at UPIs up to 1 lakh rupees, they don't maintain your PAN card or your Aadhaar card details. So
Yes, sir. Yes, sir. No, specifically in temple trusts, this type of anonymous donations are more
yes,
compared to registered donations.
in fact, in the since you have mentioned temple trust, and I'm aware of one fact that I will like to bring to the notice over here. In the
Yes, sir.
temple trust, which are partly registered and partly religious and partly charitable,
Yes, sir.
most consultants would have given you a view that where they would keep a box for corpus donation, marking it as donations for corpus donations, and they are kept over there, and then it is treated as a corpus donation. There have been landmark judgments to say that though it is not part of corpus donation, it should be treated as voluntary donations, and therefore the
Yes, sir.
provisions of section 11(1) shall apply. You have to apply 85% thereof. And therefore, I say, please do not do any such aggressive planning. Gone are the days of aggressive planning. The litigation costs are much higher, and therefore,
Yes,
I
sir.
would recommend you to refrain from such aggressive planning.
No, most of the time, this material contributions are towards corpus only for construction and development of the building or anything. So
Right.
that will not be for income.
Right.
That UPI payments will be towards the expenses that we can show as receipts for the trust and income. But this materials received as kind can be shown as a corpus donation, sir.
Again, if you get a corpus letter,
No, that is the problem. Donors will not give any declaration. They will pay to a steel shop and they will ask, they will send 1 ton iron rods for construction.
and you are giving answer to your query itself. If you are saying it is corpus donation, then you have to fulfill the complication and the guidelines as for corpus donation, right?
Yes, sir. Yes.
Sir, is
No,
this
it is
thing?
compulsory for any donation above 10,000 to take a letter from the donor
So
Asha
that is
towards
the
ma'am,
JB.
corpus.
Asha ma'am, now we have to be more responsible. The intention
Yes,
of
sir.
bringing, such kind of the session is to act with the responsibility, and this is the very important concern. Now, sir, this thing is also applied to Section 8 company.
Yes.
Okay.
Thank you, sir. Thank you.
Yeah, Preeti madam. Preeti ma'am. Preeti ma'am, please. Any question?
Yes, 2 questions, please, sir.
Please,
Sir,
sir.
we get calls from donors that we would like to give you wheelchairs and not money for wheelchair. We give assistive devices to people with disabilities. So we get calls from many donors that we would like to give you wheelchairs or maybe things in kind. Even while we were distributing ration during COVID times, so we were getting the ration as such and not the money for it. So how do we maintain that in our books of accounts to be able to abide the income tax laws?
So technically, they say that you need to. So suppose if you've received any of such donations in kind, you need to mention them or record them at their fair value, and obviously, but you need to also, as per I have mentioned in 17AA, you need to maintain the records for receipt, including the PAN, Aadhaar, or any other documents, and therefore then spend the money accordingly.
So when we talk about fair value, so whatever our vendor is giving it at, we will add that value to it
Yes.
and show it in our books of accounts. But because
No,
we
you will
have it,
not show it in the book. You will not show into the books of accounts, but you will have to see. You will have to maintain records to prove that you suppose. Let's take an example of wheelchair. Since you've given a wheelchair, you would have received 2 wheelchairs. You will have to prove records to that you have done an application of those 2 wheelchairs also.
and so when we receive old wheelchairs, we receive many old wheelchairs, hospital beds, diapers, all these things. So how do? But they are old. They are not new.
So then, are you taking it to scrap?
No, we are giving it to people.
So similar logic will apply. No, you will have to show the application thereof.
And when they are not in good condition, we also give it to scrap. How do we maintain that?
So if you are giving it to scrap, then you will be receiving money. You have to account
So
for
that
it.
we just add, because then we will not get any PAN or Aadhaar from the scrap dealer.
See, you have, so you will have to maintain the who or in those cases, Preeti ma'am, who is the donor? The donor is the person who gave you the old wheelchair. Let's stick to the example of wheelchair, right? Donor is the person who's given you the old wheelchair. He's the scrap dealer is not your donor.
Yes. Correct. Yes.
So under 17 AA, whose records are you supposed to maintain? Donors records you are supposed to maintain. Am I correct?
Yes. Got it.
So you need to maintain that. Scrap dealer is just an intermediary for conversion of that old wheelchair to the monetary value. He does not become your donor.
Right. So one more thing, when we were talking about UPI, we don't usually get donations through UPI. If we get, we maintain their PAN and Aadhaar. But when we are selling something at our stall, it is for the convenience of the stall owner that we take amount in UPI, but it is towards the sale of our product. And we can't have Aadhaar and PAN. No one would like to even buy our products if we start asking for their Aadhaar there.
So I will say the legal challenge is since 17 AA very categorically now says that you need to maintain it. The practical challenge is if your receipts from the goods that you've sold, which you mentioned, exceed or are within the limits of 115 BBI, then you will then there is no challenge. Otherwise, you still have a challenge. So what I mentioned of 5% or 1 lakh, I mean, whichever is higher, if you're within that limits, you will be out. Otherwise, you have a challenge.
Would be considered as anonymous donation, even if we have
Yes.
the mobile numbers.
Sir,
Mobile number, see ma'am, the records which are supposed to be mentioned, if you go back to my presentation, 17 AA does not allow, it says 6 documents basically. The passport copy or your election Aadhaar card, your voter card or your ration card or your Aadhaar or your tax identification number or your PAN card. Mobile numbers are not recognized over there. I know you for a mobile number you need to give an Aadhaar or a PAN or some documents, but as on today that is not recognized as the 17 AA. So you will face that challenge.
sir, I think Preeti ma'am said, I think they are selling the products, sir. Isn't it, Preeti madam?
It is
Yeah, they
about
are
the
selling
sale
the
of
products and
products.
receiving
That's
the
what I
money.
have understood that only.
They are
Sale
receiving the money, no, sir.
No, they are receiving money, but they are, sir, selling the product. They are not taking donation. Is it? Are you counting donation or?
No. What? So correct me, Preeti, if I'm wrong, but I think I have understood it rightly.
No, I have
So
also understood that, sir, because it, Sanjay sir, that comes under that anonymous amount.
Okay.
Not as a donation, but still anonymous entry into our account.
So Sanjay bhai, what they are doing is they are selling products, but the receipts that they are receiving from that sale of products, they are showing it as donations. Am I right, Preeti madam? If I've understood your query correctly?
No. We may prepare a bill for that. For example, if we have sold at Mall of India, so we will prepare a bill sales at Mall of India और उसका अमाउंट लिखेंगे और जो डिसेबल्ड आर्टिस्ट ने वो बनाया होगा उसको वो हम उसका अमाउंट दे देंगे.
No, correct. Hold on.
Yeah.
Are you trying to say you are in the activity of business of selling goods?
By people with disabilities.
Sorry?
Yes, sales of goods made by people with disabilities.
Okay, fair enough. Then I stand corrected. I'm sorry, I had misunderstood it. Provisions of section 215 subclause 7 will apply, which is you will fall under the other general public utilities, and therefore any activity incidental receipts cannot exceed more than 20%. And if you are below 20%, if your sale income receipts from the sale of goods is less than 20%, there is no problem. However, you will have to maintain separate books of accounts.
Yeah, really wonderful, sir. Any question from any participant, sir? You have given so much time to us.
To that
It
extent,
is-
PP madam, I stand apologize. I had misinterpreted
No,
your.
sir. Actually,
I'm
that's why,
thankful to Sanjay sir's intervention also, because I am a total layperson. I would just grab the knowledge that I get. So he also understood where I'm coming from. So I'm glad for the intervention, and I'm so thankful to you for all the good and advice. Thank you so much.
meantime, I also share one feedback link and cake report that is openly available, sir said. So I shared the link. So after that, I mean, whatever material that we received from the Premal sir, that we definitely share with the all participants within 1 or 2 days. Now, any question from any participant before we conclude? Before we conclude, any questions? Sir, the many application is, as you mentioned, there is a 70% application is being rejected. Now, I know like people who are here, many time I said, the people here in the charity by the intent only, right? They wanted to do something good for the society, but they are not much concerned about the financial transaction, what they are doing. And sir, there are many organized, this is not my word, many organized said that they are not able to find out the competent chartered accountant as like you who can guide on the charitable part. So, sir, how the gap can be addressed by you from your community or as like us, or what is your suggestion, sir, by concluding the session, sir?
So I started on a light note, and I will like to end on a light note. I have already shared my coordinates on the end of my PPT. And my phone is never switched off. This is my area of passion, and therefore, and it is my mission that, as I said, charities should exist in India because there are a lot of underprivileged people in our country. Though we are claiming that we are a developed nation, there is still a lot of work to be done, and therefore charity has to survive, and we need to move forward. But since this is my my mission that charitable entities grow, thrive, and come out of these complexities, anytime anybody has a challenge, they can send me a WhatsApp message, they can email me, they can call me. As I said, my phone is never switched off. However, with the caveat that I pick up my phone when I'm the boss in my office. However, when I am an article, I know people will understand when I'm an article. That means I'm not a boss, but an article. I'm not allowed to pick up my phone. And so on a lighter note, I know people who are married will understand what I mean when I'm not allowed to pick up my phones. So if somebody calls me during those times and I don't pick up the phone, please understand that I'm not allowed to pick up the calls during that kind of time. However, if you send me a message, or I will definitely try and call you back to ensure that your problems are addressed.
Yeah, thank you, sir. And sir, I would like to, in conclusion, I would like to say that I received the mail from taxman. If you see this booklet, that I received, I received the book at my home. I read it, And then I contact to the Premal sir that why we don't have a the discussion on that part on that large forum, so people understand. So uh, my personal suggestion is, if you are part and parcel of the charitable activities, I would say that you must have some books. So I highly recommend it, the book which is written by the Premal sir. It is really good, give the good insight, and that you can also give to your chartered accountant as well, because that they are doing, practices. So that is available on Taxman. I'm Sri Premal sir. All the royalties and all the things that he earning, he is giving to the charity. Here, our purpose is not to promote the books. Our concern is to promote the responsible businesses. So, though it is a charitable activity, but we have to be more responsible, right? And sir said the charitable trust or charity activity must be exist. Sir, we are also on that part that we are helping the organization at least by dissemination of the good knowledge, by the support of the people like you. And I'm not remember that how much webinar we have conducted so far, because since long, we are doing so far 13,000, 30,000, sir, I would like to say 30,000 organization has been benefited through our online session on the varieties of topic. And I'm really happy that you said immediately yes, sir, immediately yes, that I'm ready, subject to your time allowed. So you given a time, we change a date, again we fix the time, but it is happened finally. Sir, we are so grateful to you for doing the practice on that particular part, helping the charitable activities to grow the charitable activities, especially in the country like us. Thank you so much. And I'm really happy that all the participants find it meaningful. And you are, you and as your firm is become really enabler, especially on the compliance part. One last note that I would like to say that there are many startups or many organizations they closed because of lack of understanding of compliances. So compliance is really become very important part. Whether it is a business compliance or compliance with the charitable trust, it is equally important. So thank you so much for making the compliance very easy for us. Your presentations, your hard work is definitely useful for us, and we all people will act, the way you guide, sir. Thank you so much, sir. Thank you so much, sir.
Thank you. Just one small caveat,
Please, sir.
with your permission, Sanjay. I would like to make it very, very clear. I am not receiving any money for this book, and this is no way a promotion of the book. The idea of writing this book was very simple. If somebody reads this book, maybe since you have read this book, idea was to write the book without any sections in that, so that the layman can completely understand the provisions of law. And I'm pretty sure, as a trustee or a settler or a founder, if you understand the law, you will comply with the law, because nobody wants to have non-compliance. And that was a simple basis on why we had written this book. We have tried not to put a single section and put it in a layman terms. And my directive to taxman was very, very clear that I don't want a single penny from this. I want you to spend this money for the benefit of the people, because if people will will gain some knowledge, obviously they will ensure that it goes all around. So that was the only caveat that and I'm really, really thankful to all the participants for here
Oh,
giving
the
me
other
a
one
very
bit, no? The other one, no?
Sir, please, sorry.
here. I'm really thankful to all the participants for giving me your good 3 hours. I mean, in the time when we are really short of time today because of many commitments, you have come here and given me your valuable 3 hours, which is very, very precious. And I'm really thankful to each one of you for giving me this opportunity so as to allow me to take my mission forward of helping the charitable entities. Thank you, and really thankful to Sanjay Bhai for giving me this opportunity. Thank you so much.
Thank you, sir, and again all participants, those people who share the questions. Now, sir, with your permissions, we would like to conclude, end the session here. And it is already, sir has also given a consent. It will be in YouTube. So we'll share the link. You can also share, among others for larger awareness on that side if they missed. And once again, whatever material we received by the sir, Premal sir, we will share with all the participants within 1 or 2 days. Thank you one and all again.
Thank you so much, sir.
Thank you very much, sir. Thank you.
Thank you, Asha ma'am.